How's everybody doing? I hope y'all doing well, but I'm doing a quick emergency update because, man, shit's looking grave right now, dog. As you can see, everything is pulling back as expected as for the rally yesterday. But why things are looking pretty bad right now is because of this. Of course, we're at war, so we're expecting more strikes. And the difference between the strikes we had recently is that they were all targeted towards oil refineries. And these refineries have a big cost on the global economy. And if oil goes up, like I've been saying, then everybody's going to suffer. I want you guys to understand how big of a deal this is. This is just one of the CEOs of one of the refineries that got attacked. Right here, he's stating that it's going to be a 17% loss between 3 to 5 years. It's going to take them 3 to 5 years to replenish that loss. And when I asked Google AI, what was the total supply loss between all the energy refineries attacked recently? Yes, it says over 17%, which said in the article up to $12 million loss per year. But then I also asked, can you make a calculation percent loss of the world supply of gas? It's a over 20% loss, approximately 20% of world's liquefied natural gas. It's not looking good, guys. And remember, like I said in my previous video, countries are gonna have to get involved. It doesn't matter if they say no to Trump. It doesn't matter if they don't want to. If this continues, they're going to have to do something. Once the people and the populations in those countries start to get uncomfortable, they're going to demand for something to happen. So if Trump likes it or not, even though he's begging right now, he might still get the same outcome. They're going to get involved, which is just going to bring, it's just bad for the future, right? So with that being said, if oil's going to keep going up all over the world, then inflation all over the world is going to keep going up. And with the Fed watch that we had on the previous video, we had the possibilities of hiking interest rates getting higher. And now when we look at the Fed watch, especially after the FOMC, where Jerome Powell pretty much didn't really say anything, he was just like wait and see, the same shit that he always says, the probabilities of them hiking is just rising. This is rising. And now when we look at future dates, it's rising. And now on the 29th of July, that morning when I looked at, when I made that video, how I said that I did not see them, like when it updated, it didn't show the possibility of hiking. And remember, it was at like 1% possibility. Now it's 6. It's just gonna keep going up if this continues. Now here on the 29th of July, they might hike it even more. It's not looking good. It's not looking good whatsoever. Being said, I'm going to be getting into oil. I have not gotten into an oil trade yet, and sucks, whatever. But now with all this new strikes and all this new news coming out today, yeah, the probabilities of oil taking its wick to go higher, or at least going to more into this premium section on the range, is more likely. It's going to be a much higher possibility. So real quick, doing oil TA. Now let's see what's our structure. When we zoomed in to the 4 hour, let's see what is going on. Yeah, boom, boom, there's our high, there's our low. So now this is our high, this is our low. This would be our current range. Let's pull the volume from the high to the low, see what's the volume up in this range. Okay, so currently we are trading in the POC of this down move. All right, this is the POC of the range, value area high, value area low. Let's see where the 50 EMA is at. Okay, we're reaching to the 50. So we can easily get something, and this is why I'm getting in today. I remind you, I don't enter my full position now. I built my positions, and I'm gonna get into that, how I would enter this with using that 20/20/20/40 method, which I talk about in my course down here. I talk about that entry method on building a position here on the entry model / risk management. But anyways, going back into, oh wait, can you guys even see that? Sorry. Right here in the entry model and risk management, but going back into oil. Okay, so right now I will put my first 20% of the position right now. My first buy will be right here. I can easily see us coming down to the 50 EMA, sweeping down these lows, touching the value area low, something like this. Where is, get a little W formation and break out of here. And if we do get that, then I will add the next 20%. And if you look down here, this is an order block that we did not fill, which we're gonna likely go into because this is the value area lows on the high of this order block. But let's zoom into the 1 hour. Let's take out the 50 because it's gonna be obviously, we're gonna start trading below it. Now let's zoom down here and see what's going on in this area. We have vector recoveries down here, so we can easily come, if we're gonna come down, we could easily come recover these vectors. But remember, our structure is this: up, down. This is our swing low. We can easily come all the way down here and still be bullish. So then I will save my last 20% for these recoveries. Maybe like break up your last 20% into 2 buys. So first buy right here, second buy right here, and save your last 40%. And remember, if you watch when I talk about my entry model, your 40% is very strict. Either you wait until you get clear confirmation, or you get that quick, that extreme sweep. Because whenever there's extremes like this, there's always a major rally back. Okay, so if we get a huge extreme dump down low, which we can easily get, because when we go back into the daily, let me take these off. We have recovery zones right here, and we have a gap, and we have a gap down low. So we can easily, if we are going to get the scenario, we're going to extreme dump down. Let's see where the 50 EMA is at. Yeah, if we're going to come trading back into the 50 on the daily time frame, we could come recover at least this vector recovery and maybe get wicked out. So I will save my last 40 for that huge dump. If we recover this gap, I'm putting my last 40 there, period. Because either way, this is a good buying area. So then I will save my last 40% for this zone right here, between 76 to $70 pretty much. This would be my last 40% zone. Disclaimer, I'm not a financial advisor. Just because I'm getting in now doesn't mean you have to. I have my own trading strategy, my own trading plan. I could absorb that movement down. I don't know if you can. And that's why don't always just listen to any follower when to buy or when to sell. If you're going to take a trade idea from anybody, make sure that it correlates with your risk tolerance and with your strategy, okay? Just because I trade this way does not mean it's optimal for you and your account size, okay? But with that being said, if all this news and everything going on, oil is going to take its high, period. That's my narrative that I just built. So if that's going to happen, then inflation is going to go higher. The Fed is not going to cut interest rates. I believe they're going to hike it, if I'm being honest. And if that happens, then the dollar is going to rise. And like I've been saying about the Japanese carry trade, the Japanese are going to intervene. Have to. So the stock market and everything else, the pretty much risk assets are going to more than likely get a significant pullback. Again, this is not the end of the world. This is just buying opportunities. We've been up only. We need a contractionary phase. Markets have recovered 100% of every crash, okay? Inflation is going to keep going up, which in turn means no rate cuts, possibly even a rate hike, which now makes the dollar go up in value, which in turn gives more investors of incentive to get out of high risk assets, to take advantage of that appreciation of the dollar now. So remember, take this as a buying opportunity. And also, gas is going to keep rising. In my last video, I said we broke the 50. This should have been my red flag sign, but you know, we're all human and emotions get the best of us. I was like, hell yeah. But with this adding on to it, it just gives it more of a red flag, because this just tells you that there was less selling pressure. So if there's less selling pressure, that means you're more likely to have a reversal from here. But remember, I'm a structured trader. Let's structure out what's going on in this structure, right? So we had our high, boom, 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 boom. We swept this low, which made this low, and then we continue making this low. Our recent high is here. So based off the structure, we are trending downwards, okay? So this will be our invalidation high, okay? And the other red flag is that not only did we break lower and now we are retracing back into the 50, we had a green vector break. And remember, go back into my course and I talk about the in the where is it? In the confirmation part of the course, I go over how this is a trigger to get into a trade or at least start building one, okay? So our validation is this high. When we zoom out to the weekly time frame, it doesn't help that we also recovered this weekly vector fully. Finding support between the 5 and 13 EMA. This can easily be the rise, retrace back to the 5 and 13 for the continuation. We are hoping that we get we are hoping for, if we're going to be bullish on crypto, this is what we are trying to see. We are trying to see a rise, which is this candle, and stay underneath these highs, and then retrace back to the 50. And then from the 50, that's where we get that real move back up to break the highs. But again, I still think that we're going to make another low in crypto. Over to my Twitter, or X, same thing. I updated my 4-hour USDT chart. All right, now let's go in depth of what I'm anticipating, okay? What I'm seeing currently. Right now, if you weren't in shorts already, then these two zones would be the next areas to look for a continuation short on the crypto market. As in, if you're going long on USDT, of course, that means you're going short on crypto, right? But right now, as the price is going, we're likely going to go to this zone right here, the 4-hour/flip. And if you're wondering, why is this the flip zone? Why this zone is very important? And this is that high on the daily, that 8.22%. Not only is this the structural high on the daily, this final order block is very important because now we have vectors inside of it. And if this order block caused us to make a new low, because this was our structure, we had our high, and then this order block caused us to make a new low. We swept this, continuing the bearish order flow. And now when we go up here, this is the last order block before we made that new low also, continuing that bearish order flow. So this is our flip zone. If we stay underneath 8.22, if we come into the zone and we do something like this, where we come up, we did like a little M formation breakdown, or we SFP the high, come down, break structure right here, this is just gonna follow the trend that we're currently in, okay? So that would be your last swing longs to get to 80K based off the current order flow. But remember, markets don't move perfectly. There's a possibility that we can easily get a quick move out of here because this is the bearish fib pulled from the very high to this very low. And it goes in sign with these highs right here, which is just liquidity that it could come attack. So the only way I will entertain a long here is if we get an SFP. This has to be a wick on the 4-hour, 1-hour, or like a tiny manipulation range on the 5, 3 minute, then I would entertain this long. But if I'm gonna be honest, guys, if we get above 8.22 and we start finding acceptance here, yeah, I'm gonna be honest, based off with how everything's going, we're likely gonna come to the high of the range. Now, do I think this is gonna hold weight? Do I think we're gonna reject off the range high? If I'm gonna be a betting man right now, currently, with based off news and everything I'm saying in this video, I don't think so. This is just an idea because it is an area to look for shorts, right? As in longs on the crypto market. The only thing right now that you could probably look for a possible long on crypto is we do have the VWAP and the POC of this from the very high to this down move right here. We can find a short here also, but I would just take that this whole range from here to 8.22 is the area you need to pay attention. If we start to see weakness and start breaking lower, then it's safe to look for longs. And if we get underneath this low, yeah, we're easily going to come down to like 6%, easy, which will put in turn Bitcoin to 80K. How would this idea look like on Bitcoin? So again, remember, it kind of looks similar. When we put them both side by side, this is similar. Remember, this is that high on USDT that we need to stay underneath, that 8.22%. So pretty much this low is our validation though. Okay, so we could come down all the way down here, find support, and go higher. But like I said in my previous video, we are breaking above the 50 EMA. Now we're currently breaking lower and almost trading outside the cloud, and the 5 and 13 EMAs might start crossing, suggesting momentum to the downside. But keep it level-headed. Remember, when in doubt, structure out. This low is your protected low. And if USDT takes that 8.22%, yeah, likely we're gonna come lower and take these wicks. Do I think this bottom is gonna hold? I don't think so, because we did recover fully this vector recovery. What other recoveries do we have down below? Let's see. When we zoom into the left for more recoveries, this is our last recovery zone right here. You might be seeing this, and this is where I put the range high. If we come back to the range high on USDT, come back to the range high and we actually get this, then I think that's how Bitcoin's gonna look. Sorry, let me go back. I think that's how Bitcoin's gonna look also, where if we go all the way to range high, this will be your last long. We're gonna take the rest of that recovery and then break out of here. Look like a SFP of this low. A quick wick down, recover this recovery, and get out of here. Let's zoom into the 4-hour and see what's going on. So the 4-hour doesn't look good. This was our current structure on the upside. We did flip bearish in this internal structure. So we are anticipating we're gonna go lower, which, did we take this low? Yes, we took this low. The next low is this swing low. Look, that 8.22%, we still have more room to go higher, right? We still have more room to come up here. So how that will look on Bitcoin is a recovery of this vector and come back to the POC. And also we have this blue vector recovery. So if we are going to reject off 8.22, then we could come down here, find support right here on the trend line, and get out of here. Okay, if we're going to keep going on that rally. If we're going to break and we're going to start going into this SFP, the SFP only, this is just hopium right here, I wouldn't put too much weight on this. Then how that would look on Bitcoin, the rest of this vector, and possibly SFP these two lows, just come down real quickly and get out of here. And then, like I said before, if this doesn't hold, then range high is next. And if range high is next, then what's next on Bitcoin? The range low. And like I said, final hope is we take that wick, recover the rest of this recovery, get that W formation, and then get out of here. Okay? But one thing I want to bring to your attention, if you go back to my Twitter, scroll down, I posted this yesterday. I did an update on the cycle pattern on Bitcoin on the weekly time frame. I said level 2 low has been confirmed so far. The cycle pattern has been accurate. What to expect? Let's see where the level 2 high forms, but since we had the low confirmed, it's safe to assume that the next break of the current low will likely be the true low to target the all-time high. Pretty much what I'm saying is, look, this is now a confirmed level 2. And if you want to go and learn more about it, go back into my course, and I believe it's on market patterns, where I go over the cycle pattern, M's and W's, and the continuations. So pretty much what this means is, remember, on the weekly time frame, if we do recover that, let me just show you on Bitcoin. Let's see on Bitcoin on the weekly time frame. Let's see if that daily recovery shows up on the weekly also that I was talking about on Bitcoin. No. But we have that recovery below. So even if we come down here, remember, to confirm a break, again in my course, to confirm a proper break of structure has to be a full body close. So if we are going to come down and get that best case scenario where we are going to reject off the range high on USDT, reject off this high, and get that scenario where we could recover this and then we get out of here, then on the weekly time frame, this will look like a wick. And the new range low will be that new wick low that got created. Okay. And the reason why I'm saying this on how to identify a proper break and what to expect is because if we do get that full candle close, then going based off the cycle pattern, peak formation level 1, level 2, level 3, W formation level 1, level 2, level 3. So we are now peak formation level 1, level 2. Then that means the next low is going to be a dump down. But the good news is that the next leg down will likely be the bottom. Bad news is I don't know how low that could be. We can easily come down, take out 50K, go down, maybe fill this order block, because actually we never filled this order block or this imbalance. If you really zoom in right here, Bitcoin front ran that zone. So the low could easily be around the 38 to 50K. But all I'm saying is if we do get that confirmed, that means we are for sure going lower. And we could go as low as 40K maybe to recover this vector. Who knows? But the only good thing about this is that the next leg down, once we find our little base like this, it's likely we are going to get that real rally, because this is not a true rally out of here. All we did was recover this vector recovery. And when we zoom in, and we use the EMAs, this is just a retrace to the 5 and 13 to go lower, which happens all the time. Like right here too, we just retrace to the 5 and 13 and tap the 50 to go lower. A true rally will be coming back to the 50, mean reverting. I hope that was clear and made sense, but pretty much line in the sand, USDT 8.22. Get above that and start finding acceptance. It's not looking good. Start to de-risk. Already told you what to expect if we are gonna reject off that final hope level. Bitcoin's pretty much invalidation level is that 65K. But again, going based off USDT, the 3 scenarios I already told you. Okay, I told you how to identify it and when it's confirmed or invalidated. All right, and with oil, yep. To really simplify what I was talking about oil in the beginning is that, yeah, the stock market and tech market, high risk assets are likely going to pull back. But remember, the stock market recovers 100% of every crash. Take it as a buying opportunity. And I will be for sure getting into a oil position. Again, I told you my entry model, go into my course to look for the confirmation method with the 50 EMA break, the entry model, the cycle pattern, everything what I use to trade is in that course. Course, not everything, but for the most part, 80% of what I use. But I hope you enjoyed, and I'll see you guys on the next one.